Hello out there, all you traders. This is TackleTrading.com. My name is Coach G. That's Coach Gino, bringing you another weekly newsletter and market scoreboard to help you prepare for next week. So what's going on? What's the news that moves the markets? Well, the markets, as you know, hit all new highs. That's the Dow and the S&P. The U.S. market hits new all-time highs. That's historical. We've shaken off the Brexit. What put a stop to this new high? I mean, we had a good advance today, but we had news last night of France having a possible link to terrorism. Another scum of the earth decided to terrorize the town of Nice, is what we call it, N-I-C-E, or Nietzsche, or whatever you want to call it. France terrorism, possible terrorist link. But we shook that off, and the market actually is due for a pullback. Earnings season has started. Earnings season has started, guys. We kicked it off with Alcoa this week. Alcoa had better than expected results. So did some big banks. But next week, we have more than 400 companies reporting. And the following week, we have over 1,000 companies reporting on the same week as the FOMC announcement, which I believe is July 27th. And right now we see very, very small chance, like a 3% chance of them raising the rates. Next week, very, very boring. Housing starts on Tuesday. Oil reserves on Wednesday. That's every Wednesday. Jobless claims every Thursday. But also on Thursday, look for the Philly Fed business outlook. Okay, real quickly, let's take a look at the markets. I'm just going to look at the S&P. As you know, this is not a time to chase the market. If you missed this rally, wait for a pullback. Here's the current channel we're in. We hit a high of 2169. I'm looking for a possible pullback to the 20-day moving average. There's major support on the breakout point of 2111. So keep an eye. All the markets look very similar. The Russell and the NASDAQ are still to hit all-time highs. Keep your eye on those, but they are bullish. The market correlation is interesting. If you look in the last 2 months, the two leaders up here are China and the U.S. And down here is the rest of the world markets. This is VEU, the one I'm pointing at here. And the very bottom is Great Britain markets. So notice the U.S. and the rest of the world have lifted up all other markets. And look how we trade almost in tandem. The most volatile one here being China, the yellowish line. Why? Because when it goes low, it goes really low. When it goes high, it goes really high. So keep your eye on China. A good way to keep your eye on that is ticker symbol FXI. That's Foxtrot, X-ray, India. Internal strength, one of my favorite indicators here I developed. This is the highs versus lows. It is green. It's 137. Anything above 50 is bullish. Favor the bulls. Seasonality, we usually break out towards the end or towards the middle to end of July. So this is normal. But on this next pullback, see if we hold, because history shows us that we come back to make new lows in August. That could possibly happen. That's the normal trend. July, historically, the best sectors are materials and financials. So as you can see, the top two sectors are usually materials and financials. This is a 20-year historic sector rank. Look at the bottom two sectors, technology and utilities. Well, so far, this has come true. If you look at our gridiron down here, yes, the S&P 500 or the spiders is bullish. You can see it on the green side of the field here. The dollar is also moderately bullish. Look at our number one sector. It is now ranking the number one bullish sector. Just like history's proven in July, there it is, XLB, materials taking the lead. Behind it is supposed to be financials. Now, financials is still down here. It's not number two leader. It's one of the laggers. Usually in July, technology and utilities fails. So if the market continues to rally up, look for utilities to start going downfield. The flight to safety will be given up. Plus those stocks, the fundamentals are overvalued. The dividends aren't as high as they were. Very high PEs. I think it's ran up quite a bit. It's a risky sector, so if you're jumping in utilities, definitely use a nice tight stop. So watch for financials to start beefing up there and running down the field for the bulls. This might help since some of the banks came in with good earnings reports, some of the big ones. Look for technology and utilities to drop downfield. Now, looking at the sectors, everything is still bullish. So what do? How do you look for a bearish trade? You don't. You wait for a sector or industry or maybe a company that has bad earnings if you're going to look for a bearish trade. Otherwise, wait for a good setup. Now, looking at utilities, this is the only sector I see setting up. It has pulled back to the 20-day moving average. This is a textbook bullish pullback right here. The trigger would be above today's high on the utility sector. Then again, it is one of the sectors that usually drops between now and August. So again, a tight stop on your utility plays. Gold is bullish. Oil is bearish. One of the few things bearish is oil. Nice downtrend going here. I am actually glad that it's pulling back because I have a lot of covered calls on USO, and this is going to allow them to expire worthless. Another industry that is bearish is agriculture. Check out the swing high we got in agriculture that triggered today. A lot of this due to the dollar being bullish. Another one to watch to get a clue if the market's going to rally or go down is keep your eye on VEU. This is the rest of the world. A lot of Chinese influence in there also. We got a swing high today. This should pull back. Let's see if it holds the 20-day moving average. If it does and it starts to go back up or it continues to go bullish, there's no reason for our markets not to continue to be bullish also. Also watch the dollar. Usually some of the sectors will pull back when the dollar is this bullish. And I'm not seeing that, especially materials. Materials usually drops when the dollar is this bullish, but I'm not seeing that. I see a lot of volume going into it, a nice bullish run today. Definitely check out the forex report that's coming out this weekend. Learn about the dollar and the correlation between the dollar and the euro. Okay, this is why we're here. Final thoughts of a professional trader. You guys have been doing this for many years, just over 18 years. When I see the VIX hit new lows, that means there's very little fear in the market. This is a good time when nobody's fearful to buy that insurance. It's cheap. I like doing these bull call spreads about 8 points wide. I use the VIX. It goes the inverse of the market. So when the market drops, I'll have my insurance in place. Because right now I'm bullish. I have to buy the insurance to protect it. If you don't want to use the VIX, you can also use the VXX, very similar, or the UVXY. But I'm shying away from the UVXY because there's a reverse split on the 25th of this month. I do not like reverse splits being in them. It's going to be a 5-for-1. So why use that product when you have these other two? All in all, guys, wait for a pullback. Wait for a pullback. The global markets are recovering quite well. Watch the Chinese market. Did I forget to mention be patient and wait for a pullback for a setup? Do not chase the trade. Tighten your stops. The market's a little overextended. Let's see what happens in this next pullback. Let's see which sectors pull back and go back up and which sectors break down. Stay tuned for more from Tackle Trading. Again, this is Coach G. Have a great trading week.